Okay, here's our disclaimer. Performance is not indicative of future results. Trading forex carries high leverage may not be simple for all investors. High degree of leverage can work against you as well as for you. For deciding to trade any such leverage products, you should sustain loss while your initial investment. Therefore, you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margins. Seek advice from an independent financial advisor if you have any doubts. Information, including commentary traded use provided on BookForest.com, should not be relied upon substitutes and spend a bit of research, which should be performed for making investment decisions. We are merely providing this information for your general information. The information and opinions presented here do not take into account particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon a unique situation before making an investment decision. They should not tailor trade size and leverage to their personal risk appetite. We're not responsible for any loss incurred on investments made by readers and clients as a result of this information. And we do not render investment, legal, tax, or other professional advice. If such advice is needed, seek competence of a professional advisor. Right? Okay. Yeah, somebody wants me to read the disclaimer again. Really, Harry? I'll be happy to read this for you again. Okay. Everybody can see this? Let's get to the charts, which is what I really want to talk about, because the subject of today's... Let's make sure. Okay, just somebody tell me if you guys see my chart okay, right? Yeah, everybody's got the chart? Okay. All right. Again, my apologies. And before I start, feel free to pump as many questions as you want right now, because I'm under unfortunately, I can only stay for half an hour because of time constraints. I gotta go do. I have a meeting that's unexpectedly scheduled, and because of the standard daylight savings time, we got completely. Where's Ken going and where's Cable going? Okay. Before that, let's just ask the question where Euro's going, okay? Because I think that's the most interesting question. So from a technical point of view, Euro, obviously in a very, very steep downtrend, but we held, and this is a really, really important point, we held, to go back to the dailies, 1 year, we held this 2880 level twice. If we go back on the 4-hour charts, we held the 2880 level, which is big support level, twice, right? Even after we gapped down open. And that, I think, is kind of telling. It's basically saying right now, you guys have no sound? Does everybody hear me sound? Is there a sound? Yeah, okay. All right. Okay. The fact that we held the 2880 level on this thing is very, very important for the near term. It basically shows that is a serious support level that right now is a value proposition. We're basically going up and down, bopping up and down around 29.50 and before the Cyprus resolution. Now there's a lot of back and forth about they need to pass this, they don't want to pass this, they want to do a different deal, they want to do some kind of a deal. The details of the deal are less than important. The critical thing for the euro is that Cyprus passes the deal. The reason why it's so important is because if Cyprus passes the deal, the risk of contagion is gone. If Cyprus does not pass a deal, and let's imagine this is a scenario, Cyprus refuses to pass a deal, and they just basically decide they're going to go into structured bankruptcy, which is an unbelievably stupid thing to do, but let's just say they do that. That then exposes all the banks that have loaned money to the Cyprus banks, not just the Greek banks, but the German banks, the English banks, to counterparty risk. And that creates possibly a very serious contagion effect. So then that creates a very bad domino impact on Italy, on Spain, on Portugal, where all the weak banks in those countries are going to see a serious bank run. So the first thing that's going to happen, if you get a very negative resolution in Cyprus, is potentially Spanish authorities, Portuguese authorities, Italian authorities, all announcing bank holidays where the money is effectively tied up. Nobody's going to be able to withdraw their deposits, because if you have a big run of deposits, you can forget about it. It becomes just a domino impact on the whole European banking system. That is not a scenario that I think is very likely. They're going to pass this thing. Everybody's going to eat their little taxes. They're even probably going to come up a little bit short on the full bailout package, but it doesn't matter. The key thing here is to sweep this thing under the rug and stabilize it, because that's the most important thing. If they can stabilize Cyprus, it's no longer a systemic effect to the whole system. And then the critical thing there is, how does the euro react then? So if the euro reacts to the upside, and obviously we should have a relief rally, and generally the normal target for the relief rally obviously is the 30 level, because that's a level we couldn't even make yesterday. We just kind of stalled out above it. But more importantly, how is it going to trade above the 30 level? That, I think, is going to be the critical thing. If we can hold above the 30 level, we still would not have made up this gap. To make up the gap, we really have to go above 30.50 and hold that level substantially. That requires a very, very bullish move. Now, that's going to be kind of interesting, because the thing about this is there's a lot of, I would say, aggressive speculative shorts, right, that have thrown a lot of money on the assumption that this Cyprus thing is going to spin out of control, and they're looking to press it all the way down for a crack. They're looking for a crack below the 28.80, right? So if all of these shorts are then squeezed and pushed through 30s and 30.50s, you can have a very, very strong, very sharp covering rally. As we go there, it's going to obviously end up into very serious resistance zone in the 3100. This 3100, 3150 zone is much, much more serious. And even if you get a big short covering rally, the sell opportunities will probably be around over here. If you're a support resistance trader, the sell opportunities will be in the 3100s to 3150s. If you get this massively bullish move where it breaks the 3150s, then you're wrong. But I think a very low risk, interesting trade is to sell in the 3100s off of this explosive spike, and then it'll probably come back to 30.50 on a first cover, and then maybe it'll unwind all the way down. But that will cover the gap. That will be technically relatively healthy, so on and so forth. If we have a much more negative scenario, and therefore Boyke is asking me, what is this? Please go to the subject for today. This is the subject for today, Boyke. Okay? So I'm telling you how I find trades on a daily basis and how I think about them. So learn. So anyways, if the trade goes negative, and we're now at the 28.80s, we start breaking 28.80s, that becomes technically very, very negative. So you have basically a situation where you don't have the gap filled, you're starting to move down, and the trade then becomes a trade all the way down to the 2700s. It goes all the way down, all the way, and you have to actually go on a longer time basis to 2700 right over here. So the potential trades today are recovery trade if we get positive news out of Cyprus, and a buy on 30 and hope that the 30 holds. If 30 doesn't hold and we go back down to 29.50s, that's a very negative sign. We can't fill the gap. Harry is saying it could go up, it could go down. Right, exactly. The critical thing is, what does it do once it goes up and once it goes down? That's what I'm trying to tell you, Harry. The interesting thing isn't that we know it's going to go up, we know it's going to go down. What I want to make very clear is, and let me go back to the 4-hour chart so everybody understands what I'm saying. The up trade is to the 30s, right? The down trade is to the 28.80s, right? Right here. Let's just assume this is 28.80, somewhere around there, right? So the critical thing is, if we go to the 30s, hold the 30s, that's a bullish move, and I think we have a reasonable chance to make 30.50. We go to 30s and then spike right back down to 29.50. That is a sell, in my opinion, because positive news, negative price action shows you can't hold even the 30s. That means we're much more likely to hit 29s, right, off the reaction. Conversely, we have negative news. We come all the way down to 28.80s, but we hold it. We hold the 28.80s. We do not dip below that. That's actually bullish, and you want to be a buyer here on support, because that means this support remains held despite kind of very, very bad news, right? And then you possibly have a move all the way through. Now, 28.80 gets broken. That's very negative. That's an uber negative trade, and you want to follow that to the negative side, because you have a negative gap, you have a break of the fresh lows, and potentially a move towards the 2700. So so Pan is saying, yeah, that makes sense. Can I please give specific triggers when you would get in on board? Ricky is asking that. So okay, so that's what I'm saying to you, Ricky. Right now, there's no trades. I'm waiting, because right now you're guessing. You want to guess, it's fine. You want to guess. If the preponderance of evidence says it's going to be positive, you could take a trade here and just simply put a stop underneath the 28.80s and just hope you're right. And it's probably, you could get a spike up to 30 on positive news, right? You could also get blown to the bits if let's say we have negative news, the Parliament rejects it. We could have a gap down, and if it breaks down 2880s on a gap down, I want to follow that gap to the to the downside. So my preference of trades right now would be a buy on stop at 30, right? But very, very cautious on that. If I'm buying on stop on 30, I really want to see this thing hold. I would put a stop at 29.50. If it stops me out at 29.50, that's a very negative trade, and I may want to turn around and start to short it. Or a sell on stop at 28.75, right below the lows here, meaning that all hell has broken loose, and we're now going down to 2800s and possibly 2700 on a very, very negative on a negative move, right? So Rob is asking, how does this affect Euro Swiss given the continued and predictive S&B stance? Great question. I think the Euro Swiss is not acting nicely. I mean, it's the thing that's worrying me about the sort of the positive hunky-dory scenario is that Euro Swiss should be trading better than it is. Euro Swiss needs to be at 22.50 or above. But let's say people are hedging, people are maybe long euros, short Euro Swiss because they kind of want to make sure that if it's positive, it's obvious Euro's going to run really hard. If it's negative, they're going to be able to hedge some of their risk by Euro Swiss declining. Euro Swiss, the key hold is 21.50 right here. S&B doesn't want to see this anywhere near these levels, right? S&B is freaking out. They're talking about negative interest rates. They want to do everything against us. But we get to a point right now, this is the key thing, where if we get into a true contagion effect, the S&B may not be able to hold the Euro Swiss at levels that it wants to hold them. I don't think we're anywhere near this panic mode. I think mostly the Cyprus is a tempest in a teapot, but I could be completely wrong. So the point is, it's very much worth watching. And to me, the really big red warning sign on the Euro Swiss is the 121.50 level. That's where you really need to start to panic, because that means that the market is starting to think that there is a risk of fracture in the Eurozone is starting to come up. Now, Carlos is saying that the Euro-Yen is a better trade. It may be a better trade. I'll look at Euro-Yen, but I'll share with you what I think is a better trade. Euro-Yen still gappy, right? We're still haven't filled the gap completely. Euro-Yen here, the sort of, buy the risk recovery is a 124 on stop buy here, right? Probably somewhere around here. But then you're running into a little bit of a gap at 24.50 and a pretty sharp distribution here that was on Friday. So it could work. I mean, it's not a horrendous idea. What I kind of like actually is, and this basically assumes the euro covering rally. The euro covering rally to me is the euro Aussie. Because one of the things that you see here is that euros obviously got shellacked off of the bad news, but did not really. 24.50 has been a very, very strong hold on the euro Aussie, right? And if you get positive euro news, the Aussie is very likely to stay stationary. It actually euro com dollars period, but I like to use euro Aussie because it's the most liquid. If you get a short covering rally in the euro, we very likely have a move through 2500s and possibly the 25.50 to recover back this initial break to the downside. So if I'm playing the euro recovery on the crosses, I like the euro Aussie to the upside. And marginally, I like this probably second best. Euro pound. The euro pound is still very gappy. It needs to fill this gap to 86. It may work. I'm not completely dismissing it, but it's an okay trade. If you're buying the euro recovery trade, you can buy it here. But this negative gap still staying in place kind of weighs on the euro pound much worse than it does on the euro Aussie. What was that? I had a thought here that I just totally lost my mind on. Oh, so going back to euro Aussie. So what if it doesn't work? Let's play the devil's advocate. What if it doesn't work? What if we get a big distribution on? What if the Cyprus thing blows up? If Cyprus thing blows up, then Euro Aussie break of the 24.50 is a really bad break. I mean, it's the real break is sort of 24.40 if you want to trade it that way. But this kind of a sharp break to the downside, I think basically takes us to at least 24, possibly 23.50 as a euro distribution. So you can look at it two ways. Like in every single chart, this is the key thing about whenever you're looking at charts. Either this is consolidation and support for a turn, or this is simply pause that refreshes for a breakdown. Which is why again, when you're looking at the Euro Aussie, the trades here are buy on stop at 2,500 or a sell on stop at 2,450 as a possible cross trade on the Euro Cyprus resolution deal, right? Aussie itself is kind of flagging. It died out at this 104. It had 3 touches of the 104s. This is you can't see this, but it's another touch of the 104s. It's just not clearing itself out. Now I really like Aussie to the upside. If you look at Aussie around here, you generally have positive tone. Certainly, economically, right? RBA basically, the RBA did not sound. The RBA was neutral, but the RBA did leave the door open yesterday for the possibility of further rate cuts, and I think maybe that's one of the reasons why the Aussie kind of lost some of its luster. But it seems like from every communication you have from the RBA, they're not about to do a rate cut anytime near. As a matter of fact, the market now is not pricing in rate cuts for quite a long time. So if you get a positive risk sentiment back in the marketplace, right, you have all these higher lows. The Aussie trade that really makes a lot of sense is a breakout above these highs. If we take out the 104.15s, right, and we can take out the highs, that opens up scope all the way up to very, very minimum 104.50s. Let's just get this a little more. Very minimum 104.50 as our initial trade, right? If we can take out the highs here. But it really doesn't have a lot of resistance until the 105.50s. So you could have this kind of extension all the way possibly to 105s. So I like this trade, in terms of upside potential. If it proves to me that it can make that upside trade. Right now the stall is disturbing. For anybody who's long, it could be just some consolidation. But a break here below the 103.50s definitely puts us in a much more negative construct, and basically shows that the 104 was a top, right? And it puts us right back on path towards the 103 test and maybe even the 250 test, as it definitely loses its steam, right? So that's kind of where we stand right now. Everything is suspended animation. That's really the theme of the day. I think that's one of the most important things to appreciate when you trade. When you don't have the trades, you don't trade. So Kiwi, somebody's asking about the Kiwi. Kiwi is a very contained range trade. Just the Kiwi. This is a daily, right? And if you look at a daily, ignore this. These dips. If you sort of look at a daily range, if you ignore the spikes, what you see is a sort of 83, 82 range continuously for the last several weeks, and that's pretty much where the Kiwi is trading. The one positive thing I think on the Kiwi that anybody who's looking on a day trading basis should be looking at is that if we come up at 82.50 or higher today, that's a very, very bullish candle. The reason why it's a bullish candle is because you see over here support being tested, right? We tested 82s and bought very quickly. Whenever you have support tested and bought very quickly, that tells you that there are eager buyers who feel there is a value proposition on these particular prices. So when they dumped at 82, they bought them up quickly. In other words, started the lows, ended the highs, very bullish candle. You have some analogs here where you can see, the big moves like this. So here, bought at the lows, not quite at the highs, but definitely middle, upper end of the candle. Here's one where it was top third of the candle. They bought the lows, they brought it here. The next day, you basically had another 100 points of extension. Do we have 100 points of extension? No, but I think if we end at 82.50s, you want to be long Kiwi for a target of 8,300 or higher against an 82 stop. I think that's a reasonable trade, and it makes sense. Yeah, cable looks like garbage right now. Cable is really getting hammered, and euro is starting to come back down, and we're starting to sell risk again to the downside. So it all looks ugly. There's no doubt. What's interesting actually is that Kiwi is holding up against all of this selling, which is also very bullish, right? So when they risk, when they come back for risk, this is going to be whenever one of the other trades that you can you can do is relative strength trades, right? So when everybody's selling and your currency is holding firm, then when they start to buy back up, the currency that held firm usually should have the strongest pop because it had the least sell-off. Somebody wants to look at CAD yen. Actually, I haven't looked at CAD yen in a long time. Well, CAD yen is mirroring the dollar yen story, which is kind of a double top consolidation story. I think in order to understand CAD yen, you really need to understand dollar yen. So let's go to dollar yen first. And the dollar yen story basically is a topping out, clear topping out at the 96.70s, 96.50 range. What's interesting here is we are holding the 95s. Yesterday was a positive day. We tested the lows of 94s. Here's another good example of what I mean, where the market finds a value proposition. You want to get behind that value proposition. So we test 94s, came right back up, right? Right back up. Try to test it again, and the 94.50s come right back up. These were all very positive candles signaling to you that there is value at these prices, and dollar yen traded higher after that. It has not, though, however, really made it over the hump, and the hump here is 95.50. It needs to break above 95.50, hold that, and try to rally itself towards the 96.50 there. Still does not mean that we're on our way to a new bull market in dollar yen. Still looks like it's distributive. And dollar yen, for those of you who are long-term buyers, that is, buyers on the daily candles, like this would be basically a trade on an intraday basis that you still think it's basically in the middle of its range with an upward bias. That's my view on dollar yen right now. It's still range bound. Dollar yen really becomes a trade if it takes out 96.75. At that point, that becomes a really strong buy because we've cleared the highs, and I think at that point, it sets itself up for a run towards 97, 98s, and possibly on a longer-term basis towards the 100s. Again, dollar yen right now holding up relatively steady, but it needs to be. If I'm trading this intraday, I want to be a buyer, really like 95.60. I want to be buyer here, and what is that? What did my thing says? Reports 55, September 112 calls, bought a 90-foot sold. Okay. All right. So maybe there's some optionality. Maybe there was some optionality on pound, which is what drove it down. But anyways, it's not looking good. I mean, it's not looking bad. It's not looking good. I don't want to be involved in yen unless I see 95.60s over here on an intraday basis, because then I have a reasonable confidence that we have some momentum take us 96 to 96.50. Again, still within a range. So the same kind of a thing. So Carlos is saying buy 95.60, take off 96.10. Possibly. It's very difficult to I don't give direct recommendations on exits because first of all we don't do that in this forum. But secondly, it's hard to say exactly how much juice it has. But I do think that if you take out 95.50s, there's a reasonable chance we go towards the 96 level, somewhere in that range. BOJ is doing nothing with the interest rate. The one possible bullish thing for the dollar yen, two possible bullish things for the dollar yen construct. If Bernanke comes out and he is, not that he is hawkish, but he's, let's say, less dovish. Let's say he says, no, we're not committed to keeping QE all the way out to 215, right? That's a double negative, but the point being is that what that's subtly saying to you is that we may be thinking of removing QE before 215, right? If we look at the spectrum of things, where is QE supposed to be? The very dovish view is that US QE ends at 215. The very hawkish view is it ends at 213. The middle of the road is 214, right? So something that is mildly positive dollar yen, which is hawkish, is that if it ends anywhere before 215. If Bernanke comes out and says something of that effect, that could be positive. The other big positive driver for dollar yen is if the BOJ has a unanticipated emergency meeting before their regularly scheduled August 4th meeting, which would then be seen as fresh activity by Kuroda and company to stimulate the economy. Sort of, new ideas that they think that they can do in order to do that. I don't think that's a highly likely possibility. And I also don't know if Bernanke is going to be any more hawkish than he has to be. But those are two possible drivers that could push us a little higher over the next couple of days in dollar yen as we go forward. Euro, by the way, looking more ugly. It's starting to come down now towards the 29s, which is kind of interesting, right? So, we're basically taking out, I think, the lows of the day so far. And again, very critical levels here. More QE would mean a weaker U.S. dollar, right? Right. Somebody's asked me what I think the cable will bottom, given that what BOE is saying. I don't know. The natural bottom for cable, I think the cable is kind of bottomed out at this 48.50 level, but cable is notoriously spiky and can stop you out. It can do a lot of jigs and jacks before it finally assumes a fresh move. Cable right now is I'm keeping my eye on the euro right now, but we can go. I'll come back to let's come back to the euro. Let's just talk to cable for a second. Cable right now is clearly huge resistance at 51. This turnover here is very ugly. We take out the 50-50 as a support. 50-50 is a big support. We take this down. We're coming right back into the 50s. That doesn't mean it's we're in fresh lows. I think the lows here are pretty solid. I think this is all just consolidation within a broader base pattern. But the takeout of the broader base pattern to the upside is 5,200. That's where we need to be in order to get a lot more bullish on cable. And in the meantime, it can just destroy you by churning up and down, which is what it's doing. Parliament, I don't know if the meeting has been canceled, but I know it's been delayed. I don't think they're going to take a vote today. So Bookie's asking me, do I prefer the 4 hours versus the dailies? Yes. I get more granularity on the 4 hours than the dailies. I get to see more specific price action. It gives me a better view of the levels that I think are important. Somebody's asking me, would I sell cable at 52.20? It all depends what kind of a trader are you, right? So going back to cable. Sorry, we're on cable anyways. Somebody's asking me, would I be a seller at 52.20? It's not a bad sell. I'll tell you why. Selling cable between 5,200 and 52.50 is not a bad sell because you're still facing this gap, right? Gaps do get filled. The gaps do get filled, but generally, this is a resistance area. So you could sell this with let's say 52.20 on a sell with a stop at 52.75. And you would have a reasonable chance that that it's running into pretty stiff resistance and it can come back. The only issue with that, in my opinion, is that cable tried 52 several times, did not clear them. Usually, when they come back the third time and try to clear them, this is what lulls a lot of the support resistance traders into making, I think, dangerous trades. So a lot of people say, you didn't clear it 2 or 3 times before. I'm going to get into it right now, which is usually when you have the power to kind of destroy the move. It's still, not a bad risk. So, you take 20 and you get stopped out at 75. It's a minus 50 risk for a possible 100-point move to the downside if the things work out for you. But the probability of that, I think, is going to be much lower on this case. I would rather be a buyer than a seller here because I think it's going to catch a lot of complacent shorts and squeeze them. And I think the true stop, the true fizzle will be in the 53s. I don't use pivots at all. And I don't think they're significant. I use the highs and the lows of the days and the various highs and lows of on the charts as far as congestion zones. I find when you look at the charts, if you notice my charts are very clean. I don't have any indicators. The charts tell you what you need to know. There isn't much that the charts cannot not tell you if you're watching it. I mean, here's a good example. You have supports. Let's say you have the support in the 50s, right? You test the 50s, bounces back up. Remember value proposition, they bought it right back up. Those of you, this is a good example. We had actually thought the 50s, the sell the 50s here would be a major negative. It wasn't. After this is 4-hour candle. So after 12 hours, if the 49.50 has not been broken, what this is telling you is the market thinks that this is a buy, not a sell. And what you want to be doing here in that kind of situation is, if you have negative news, positive price action, trust the price action. And you had about 175 points worth of positive price action going on. Guys, I'm sorry, I got to take this. I'll be right back. Hey, Patty, what's going on? I'm fear. I'm in a meeting right now. Could I call back up in 10, 15 minutes, but it's primarily this. It's just fear and positioning. But I'll be back to it. All right, bye. Sorry. Rob is asking me, do I see cable going down to 4,300? I'm sorry. I'm not that smart. I try to trade on a 24-hour to a 48-hour time frame because I'm not smart enough to figure out where things are going to go in 6 months time frame. I'm not that good at figuring out where the economy is going to go, what the variables are going to be, what the possible risks are. I can give you lots of different scenarios that are all conventional, but I don't like to bet my money on long-term trends because I'm not that good at figuring out what the long-term trends are. So when you're asking me for my sort of views, I basically trade on a day-to-day basis because I think the market trades on a day-to-day basis. So that's good. I mean, Rob is saying that he's a daily and a weekly trader. I just don't have that. The other thing about this is that, and you could be a very good daily weekly trader. I have never been a good long-term trader without massive stops. Like I think if you're going to be trading if you have a thesis that pound goes to 143, you got to be trading with a nickel or literally a dime stop. That means 1,000 points or 500 point stops. If you're trading like with a 100 point stop, thinking you're going to get 10,000 points out or 1,000 points out of it, I don't see how anybody in real life, not in fake demo life, but in real life trading, can show me an account where they made a 1 to 10 type of a trade and it actually worked for them. Because in real life, you're going to get stopped out 5 or 10 times on 100 point stops. So if you're trading long term, you got to trade with a nickel stop, which is fine, but then you got to trade much smaller size. And then it becomes a very different conversation from the kind of conversations that I do on a day-to-day basis, which is where basically the question I ask. Or Rob says he doesn't because he scales in, but you still have to have. I mean, I'm just curious, Rob. You said you scale in, but the key question is, do you have a certain stop even in your mind, if not on your trading station, that says, okay, if let's say you think the pound goes to 143, but 6 months from now pound is 160. Where's your position? You've scaled up from 51, 52, 53, 54. You're down 8,000-9,000 pips on the position. Where would you stop yourself out in that question? So that's my question to you. How do you trade that on this kind of a basis? So use a 150-point stop loss. Okay, and a 150-point stop loss, I think it'd be very difficult to catch 100, to make pound 143. May be able to, but you really got to pick the top. You really got to pick the top. You got to be pretty lucky. Not my kind of trading, but I certainly understand and appreciate that kind of trading. All right, Euro seems to have held. We had the flutter, the move, and not much else. So we took out the day's lows, but still holding up. And again, you will see a lot of volatility. This kind of flutter volatility, which means basically if you think about this, what's Europe been doing? It's doing nothing. It's going nowhere. It's not going up. It's not going down, right? But it's driving everybody crazy because it's going 40 points one way, 40 points the other way, stopping everybody out left and right. And so that is very emblematic of the market not really knowing what the hell is going on. The market basically asking itself, where is the real move, right? And so I'm going to conclude the session today because I have to leave a little early by telling you that the real move, in my opinion, is going to be either below 2880 or above 130, in a sense that will tell us that there is a resolution to this thing one way or the other. Hyman is just asking me what would be the impact of Cyprus quitting the euro. Nobody will give a damn, but Cyprus will be bankrupt and they'll become a colony of Russia. I don't think they're going to, nobody in Europe wants to be controlled by Russia. Okay, I mean you can cry and I don't even. To me, this whole thing today with the Cyprus thing is actually ridiculous. They are getting away with a great deal. If you're a depositor in Cyprus, you basically have no money. You're holding money in a bank that's bankrupt. So here comes a deal where you get to keep 95 cents of every euro that you've deposited. Why wouldn't you take that? You know, your alternative is if the bank goes into bankruptcy, you're going to see none of your money. So I just think this is a 10% teapot, but we'll see how it plays out. 29.10 minor support. It's not support. Real support is this. This is the support. You know, if you trade around this, it's an invitation to get stopped out. You know, this is the true support. 28.80. That's what's got to hold. If you're long and strong and you want to believe that the euro is a buy, not a sell here, the support is 28.80. As long as that holds, your thesis holds, in my opinion. Okay. All right, guys. I thank you so much. Sorry for the technical difficulties, but I hope you guys get an idea of how I look at the market and the kind of stuff. Chuck finished up, says that Ashraf Lady says we kick Cyprus out and let Turkey in and it shoots to 150. Maybe we'll see. But you know, it'll be interesting. Anyways, thanks, guys. Wish you guys the best of luck next month. Hopefully, no more technical difficulties, and we'll do more trades. Take care.